quite probable that Venezuela has Bitcoin. I don't know what, of course, the magnitude of that amount is, but for all the reasons that Bitcoin represented freedom money in the ways that Venezuela has long been sanctioned outside of the correspondent banking system, it's very likely there is Bitcoin within Venezuela. Bitcoin is, never going to change because it's Bitcoin. Great. Solana, very quick to change, very fast accelerating, like tons of technologists and futurists working on new paradigms of tokenization and all the ways like crypto rails are going to start affecting our infrastructure. And so it's really like a sandbox for like pure max tech. Ethereum's like literally neither here nor there, right? It's kind of not Bitcoin and it's not that fast. And the one virtue it seems to consistently signal, sometimes to my annoyance, is this concept of like decentralization. When in reality, we all know, we just talked about kids using AI to do whatever they want in the future. They don't care about decentralization at the core.
As we sit here in early January 2026, the market has undergone a massive structural reset. The leverage of 22 and 25 has been wiped clean. And for the first time in a long time, we are looking at a clean board. But beyond the charts, something much bigger is happening. From rumors of secret $60 billion sovereign Bitcoin stashes to Wall Street giants like Morgan Stanley launching their own branded ETFs, the game has fundamentally changed. Is Bitcoin just an asset, or has it become a strategic geopolitical weapon? Let's break down Jeff Park's expert thesis for the year ahead. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
I do think it's quite probable that Venezuela has Bitcoin. I don't know what, of course, the magnitude of that amount is, but for all the reasons that Bitcoin represented freedom money in the ways that Venezuela has long been sanctioned outside of the correspondent banking system, it's very likely there is Bitcoin within Venezuela. The open question is, in the way that Stash exists, how much of it comes from drug trafficking and how much of it comes from kind of asset seizure of its own citizens, right? Because I think the narrative changes a little bit if you were to create like a strategic reserve based on that forfeiture of assets where it was basically ill-gotten, because then people would be more willing to say like, okay, yeah, the drug trafficker shouldn't get those things, so we're just going to seize it. And people will feel relatively, I think, more morally open about that. It's a little bit different when it's like the sovereign's capital for the people and then the US takes it. Then that's 100%. A little bit bad, right? So I think that there are devils in the details to this. And of course, like...
Now, I will say though, Russia, they had assets and there was some seizing and like, we're going to give it to the Ukrainian people. Like there's now this weird geopolitical kind of precedent that's being set, which in a weird way is driving people to gold and Bitcoin at the nation state level. Yes. But how do you navigate it?
Yeah, no, it's tricky. I think, though, what's really fascinating is Venezuela is not new to crypto from a technological perspective either. You may remember back in like 2017, 2018, they experimented with the petrodollar in the ways to imagine it through crypto rails. So this is why I think there's another data point to say Venezuela probably has some Bitcoin and crypto risks because they're very familiar with the technology. And you're right that they've been selling gold since about 7 years ago. And why would they be selling gold if not to reinvest that somewhere else, right? As kind of being orphaned from the rest of the global financial system. It's not to buy treasury bonds, right? So what are they going to buy? They're probably buying Bitcoin, I think. So I think it's...
I think they had Tether as well, and Tether froze a bunch of their assets. So like the whole like, bad people use this technology, like, yes, but also there's, in a weird way, Tether, which people claim is unregulated, helped law enforcement seize some of those or freeze those assets, whereas the Bitcoin thing can't be frozen. It kind of shows the technology differences of these tools.
Yeah, indeed. And this goes back to the trade-offs between gold and Bitcoin, in my opinion. The other, because, the other thing people talk about with Maduro's capture in particular is how they rope in like the international law regime to whether say this is good or bad. And you hear conversations about like violations of sovereignty and you see it like especially on some of the left side, even within this country, arguing about his release because it was unfair and violation of international laws. But what I think people don't realize is like international law as a category is pretty nebulous. And why is it nebulous? Because it's actually like a code of conduct in which the only thing that really, in my opinion, determines whether something is law is enforcement capabilities. So like take for example, like you do something bad at your home and you get punished for it by your parents. And why is that like a law? Well, it's a law because like you got punished for it. So if you can't follow through with enforcement, at some level, the argument is more about whether it's illegal or immoral, but it's not about the law itself. Law always has to have enforcement capabilities behind it. And that's why international law is so nebulous, because who's going to enforce it? The US, right? And I've held the view for product market fit in general, especially towards Wall Street. The barbell theory of investing in crypto was always Bitcoin and Solana. And the reason is because it's very easy to bet on vices and things that are basically kind of like what I call short humanity. And I don't mean like Bitcoin is genuinely a short humanity, but what I mean is Bitcoin is like a world-ending hedge, right? So it's a little bit of like a hedge against that as a vice. And Solana for a long time, I think, was the kind of meme coin proxy, right? So it was like a gambling proxy for crypto to bet on. That humans love to gamble. Humans love to predict. Humans love to kind of do these things that Solana has captured the mind share for, because it's built literally to optimize for that with as low latency as possible. So it found product market fit. And so from that barbell approach, Bitcoin is, never going to change because it's Bitcoin. Great. Solana, very quick to change, very fast accelerating, like tons of technologists and futurists working on new paradigms of tokenization and all the ways like crypto rails are going to start affecting our infrastructure. And so it's really like a sandbox for like pure max tech. Ethereum's like literally neither here nor there, right? It's kind of not Bitcoin and it's not that fast. And the one virtue it seems to consistently signal, sometimes to my annoyance, is this concept of like decentralization. When in reality, we all know, we just talked about kids using AI to do whatever they want in the future. They don't care about decentralization at the core if you're going to sacrifice productivity gains from it. Mm-hmm. So I think Solana in some ways represents that Wall Street ethos because it's about tech maximization. And the rails Solana's built has been kind of done with the DNA of like a high frequency trader. If you look at a lot of the projects that came out of Solana originally, they're kind of like the things that the Jumps and the Jane Street types would have backed, because you're trying to create like a better trading infrastructure. I mean, that's a Wall Street game. Mm-hmm. So I think Solana has product market fit. Bitcoin does too. I think Morgan Stanley, in a slightly soft way, is almost making that claim as well, because it should have been obvious Ethereum should have been on that list if they felt any differently about it. So that was the first thing that caught my eye. The second thing is, man, like I think Morgan Stanley is like a sleeping giant for crypto. And I've said this for a while now, but they have all the vertical rails to make crypto as integrated as possible for the consumer experience, right? First of all, they have wealth management that is now, I think, close to like 15, 20,000 advisors on their platform. A giant beast post 2008 when James Gorman came in and reshaped Morgan Stanley away from the Goldman model. And that is now almost 20 years ago. So we're reaping the dividends of that. Two, it has E-Trade, which sometimes people forget. Like E-Trade is now part of Morgan Stanley's direct like retail reach. And then you have E-Trade offering crypto trading via partnership with Zero Hash. So they've done things towards a lens towards tokenization and tokenized equities. And now they're bringing basically the ETF game into the system. I was told that it's very rare for Morgan Stanley to launch its own branded ETFs because they've acquired others in the past. Like Eaton Vance is a good example. But they don't label it as Morgan Stanley products. But this will be, which is kind of in a way a historic thing to just show their might of distribution. So I think that's really interesting. 2026, I think, will be a really fun year. I think it'll be great for Bitcoin. And right now, what's happened is we have a clean slate. So after December, large option expiries rolled off, a lot of futures rolled off. And so we basically have little leverage in the system, and it's a clean board for everyone to start building new positions to anticipate 3 months, 6 months, 1 year from now. So that's great because there's no inertia and gravity that is counteracting pre-existing positions that people might have had that seasoned throughout 2025. And what I've been sharing with investors is that 2025 was really marked by a bunch of covered call selling activities. So if you were coming in 2025 in January and February and you were selling calls expiring in June, September, December, because you were really excited about Bitcoin momentum post-Trump, all of those calls you had sold were in existence for the year, and they were creating different kinds of liquidity, black holes, if you would. Those are all gone. So it's a clean year, which I love. And you can actually kind of see that already in the options market. You can see it because right after December 31st, you saw the call skew finally steepen after basically 3 months of having shown no activity. When call skew steepens, what that means is that investors are either buying upside calls freshly to bring vol bid back up, or on the other side, investors are not selling calls to suppress volatility on the upside. And so one of the big theses I had was 3Q, 4Q was really dominated by a lot of cover call selling activities, which is why Bitcoin never got the chance to really squeeze to the upside. And for now, 6 days into the new year, we are seeing renewed activity to the upside. We saw lots of call buying yesterday, which is really exciting. Love seeing the green blocks come through for upside. And then we also saw people just buying very outsized, far out of the money strangles. Strangles are when you buy calls and puts that are both out of the money. So it's not making a directional bet, it's making a bet on volatility itself. And this investor is basically saying whether it goes up or down, volatility is going to be higher for 2026. And I think that is the key message for not just Bitcoin, but for generally risk assets globally heading into a really exciting year.
Jeff Park's message is clear. 2026 isn't just about number go up. It's about the institutionalization of the entire stack. From sovereign states using Bitcoin as a shield against sanctions, to the world's largest banks integrating crypto into their core identity, we are entering a year with a clean slate, high institutional demand, and a supply that is increasingly being locked away in strategic reserves. The question isn't whether you should own Bitcoin, but how you're positioning yourself for the volatility that's coming. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.